live trading, we will both be on the mic during that. Andrew, so good to see you. Andrew and Chris, my husband and I, we got dinner at the steak company in London, and it was an absolute wonderful time, a wonderful meeting. So thanks for hanging out with us in London, Andrew. And B, also, if you're around, we FaceTimed with B, who also lives in London. So it's a good time. All right, let's get started with today's blueprint, starting with the ES futures chart. This is a week I left. And this is where we closed out that week. And then, sorry, this is a week I left right here. And this is the 2 weeks that I was gone. We closed out last week, basically right where we closed out the week that I left. And this morning, we're getting a gap up. All-time high on the weekly chart is the resistance area. There is no inside and down on the weekly chart. We do have inside and down or supply on the daily chart, but not on the weekly chart. And you can see here, these are the new monthly edges for August, and the upper monthly edge is 75.65. 75.65, sorry, that is 75.98.99. I'm just going to call it 7,600. 7,600 is the upper monthly edge for August on the ES futures chart. That would be a target for an ACDC play that if you were paying attention to the monthly edges at the end of last week, then you would know that we got up and through the decelerator arrows probably last Thursday or Friday. And we've almost completed the ACDC up here at 7,600. On the daily chart, I mentioned that we did have supply on the daily chart. This is a supply zone that has been tested multiple times. Here is the 7,600 upper monthly edge in this supply zone. If price gets back up to 75.81, I'm looking for this to be resistance, as it was multiple times since it was created. It was created here using the candlestick structure when we made the new all-time high. We had an inside day and then a down, and that created the supply. But honestly, that supply was created earlier, back here on the 3rd of June, when we created an inside and a beautiful imbalance candle to the downside. So each one of these pops that you see up into this supply zone are tests of this supply zone. And it has worked to back to the downside multiple times. 73.40 was a prior demand zone that was invalidated back here on the 10th of June when we came down and we touched this lower demand zone at 72.28 and then rallied up to make new all-time highs. The 73.40 is where last week I wasn't here, but last week we pulled back to and almost a perfect touch of that level. And then the very next day, we did that on the 29th, and then on the 30th, a beautiful bullish engulfing candle. And then it looks like on that Friday, you had a continuation day and a continuation to the upside today. Now, price is very close to supply, so I would exercise caution in being super bullish right on the open. On a pullback, if you just measure the rally when we pulled back to that 73.40, and then we got the bullish engulfing and a couple of continuation candles since then. If you measure this rally here, I want you to notice how the bull channel on the ES futures is lining up with some key Fibonacci levels, not only Fibonacci levels, the 236 and the 38.2, but also key moving averages as well. You have the daily 21, these white dots on my chart, the daily 50, the pink dots on my chart, and then the daily EMA cloud, the trendy cloud here, all lining up. So a pullback to 75.11, 75.12, somewhere right around in there is a buy the dip opportunity to me. Of course, my favorite zone to trade from a Fibonacci standpoint is the 50 to the 618, back at 74.50 on ES futures would be an important level for me to look to trade out of as well, as long as price holds and closes above the 618. On the 4-hour chart for the ES futures, right here at 75.63 and a half, this is the top of a supply zone that was created back around the 21st, 22nd of July. It looks like y'all sat around and chopped for several days, and then you made this high up here and you created supply. Well, I didn't mark it as a supply zone because this morning we gapped up right to it and hit the top of it, and it is resistance still, but I didn't mark it as supply because price is trading right in there. And I know that 75.63 and a half is resistance till proven otherwise. But if price can get above 75.63 and a half, the next target is going to be this 4-hour inside and down candlestick structure that was created back here, 75.98. Remember, the upper monthly edge is right around here, and daily supply on the daily chart is right around here. So on the 4-hour chart, 75.63 and a half is the immediate resistance. Then above there, anywhere near 7,600 to the all-time high is supply, and an area that I would be looking to potentially go short from. Day trading chart. This is the blueprint for ES futures that I am watching. So the sell zone is right up here where I've already talked about. I showed you how this was supply on a daily chart, a 4-hour chart, a 2-hour chart, now a 2-hour chart. All right, anywhere near this upper monthly edge, all the way up to the all-time high, we have supply here. The most recent high that was created towards the middle of July was 76.32. I have that marked as a level inside of this supply zone. I could also mark this these topping wicks right here, where on the next day it looks like we fell from on that Friday. So 76.15, that's going to give me a couple of levels inside of the supply zone to trade off of. And the way that we can trade off levels inside a supply or a demand zone is this. If you're long, you can use these as targets inside of a zone. If you're looking to go short and you're looking to scale in, you can use these as levels to add to your position. And that's why I like to have levels inside of those zones. And so inside the supply zone for me, 76.15, 76.32, and then the all-time high, 76.48. Now, I would wait for confirmation before going short because today's trend is to the upside as we gapped up. So that would be a counter trend trade there. And reason for me personally not to just blindly go short in this zone, I would be waiting for confirmation there. As far as the immediate buy zone goes, 75.19.5 by 74.96.5. A pullback to this level is based on Fibonacci as well as candlestick structure. You had an inside and then a gap up. If you look at where the edges are, the trendy edges, what was resistance is now treated as support. So today or this week's upper weekly edge we treat as resistance, but because we gapped above it, I also treat it as support now. That means a pullback to about 75.20 would be a place that I would be watching to go long from. That's about 34 points below where we're at. So if we open up and price goes below the PMZ and I'm short below the PMZ, then I'm using 75.43.5 as a target, 75.28.10 as a target, and the ultimate target would be 75.20 to 74.96.5. This zone is a target from the PMZ or from the sell zone, but it's also a place where I will look to go long from as well. If price breaks down below 74.96.5, where we created the inside and up structure, then my next target to the downside, if I'm still short, would be 74.73. 74.75. You could use the quarter round number there. And then ultimately down here to this bullish GP 74.45 by 74.15. This 618 is a key level today. If there is weakness on the open, then price coming down into this bullish GP is a place I would be looking to go long. Friday's low is down here at 74.27.5. A pullback to the low on Friday is a valid long entry as long as the 618 of this move holds as support. If it does not, then look for price to come down into the demand zone where you have the lower monthly edge and lower weekly edge. But for today's purposes, I believe we see a bounce from this area, or at the very least, this area. I don't think this comes into play today, but it is on my chart just in case it does. The important thing is just to focus on what you're seeing on the smaller time frame chart, because this is a day trading chart. And I personally like to day trade off of 5-minute charts. I will use the PMZ here. I will use my buy zone and sell zone here, and I will trade the levels on the chart that you see. So John will go into more detail about the PMZ and how we trade it. Right now, the risk is only 3 points, a relatively small PMZ, because we haven't had a lot of volatility. Since we opened up with a gap, we've really just been trading in a very, very tight range. Real quick, I'll look at the NASDAQ chart. This chart had a lot more change to it as far as the weeks that I was gone than what the ES chart had. When I left, the NASDAQ was sitting right at about 29,000, right around in here when I left, and I come back and it is continuing to show relative weakness, especially to the Dow, which I'll show you that chart real quick. I actually, every single demand zone I had on weekly, daily, and 4-hour charts, every single demand zone held on the Dow, even though you did see weakness, especially last week. The Dow's demand zones held, and Dow is now back up in supply and back up towards the all-time high. So we continue to see relative strength in the Dow and weakness or more weakness in the NASDAQ. I will continue to watch on here because we are in weekly demand. This is not a place that, from a swing trading perspective, I'm looking to go short by any stretch of the imagination. But we are inside of the weekly cloud where we have been for 4 weeks. Expect choppy conditions inside the cloud. It looks like last week you actually flush low below the 38.2 and below this weekly demand zone. But because we closed inside of it, this demand zone is still on my chart. Notice that I do have a level here at 29,952. Sorry, where we did create a double inside and down right into demand. So basically, you're very, very choppy, but the NASDAQ is relatively weaker than what the Dow is, and that is important to watch if you're trading the big tech names. As long as last week's low 27,201 holds as support, I would look for buy the dip opportunities inside the weekly demand zone to go long from and at least play the relief bounce. If you just measure fibs from the high to that low, you can see that 28,643 is the top of that bear channel, that relief bounce top, so to speak. And then right up here near the top of the demand zone is the bearish GP from the all-time high. On a daily time frame, you can see it was a beautiful bounce from this daily demand zone. Now, I mentioned I had to remove some demand zones, and that is because I had a demand zone here that you closed below. There was a demand zone here that was tested multiple times, and you also closed below that. So I removed those demand zones when I came home and looked at the market last night. I removed these daily demand zones because it looks like you got some bounces, but they were short lived and price closed below them. We came down to 27,200, and that is where buyers finally showed up. Now we are below the daily 21. We're inside the daily cloud. You have resistance above at or around 28,800 all the way up to the top of this daily cloud, let's just say 28,970. That is resistance up here, all the way from the upper weekly edge to the top of the cloud. All right. As far as supply goes, that is here at 29,100 because you created that inside down. And wow, you were 6 straight days down on the NASDAQ. That's crazy. 4-hour chart came up right to supply. It is a tested supply zone where you tested it on Friday, you tested again on this gap up, and we are selling off from there. Friday's low, of course, an important level to watch here on the NASDAQ as well. We created inside and up here on Thursday at 27,486. Look for buyers there if we continue selling off and make a lower low than we did on Friday. The daily blueprint looks like this. This is the bull channel on pullbacks here. This is where we pulled back to on Friday. We created inside and up. You can see that it is a inside and up structure straight to supply. And now it looks like this morning we came very close to touching it, and we are getting a little bit of a bounce here. A bounce back up to 28,586, 28,651, and finally 28,692 to 28,886. 3 is the areas to target back to the upside from this initial buy zone. Below there, 27,959 would be a target or a place to potentially go long from if you like to trade the bullish GP here, and that would be 27,959 by 27,777 if I didn't throw enough sevens in there. And you can see the lower buy zones below. All right, as far as the Dow goes, the leader of the pack over the last little bit, this is, I didn't have to change anything here. Looks like last week it was a perfect touch of the bull channel, 51,625 and up we went back here where you are at resistance for sure. The all-time high 53,656, but also an upper monthly edge here and where we did create an inside and down. Daily chart, there was a reason to maybe get scared, quote unquote, as price pulled back here on the 23rd of July, but we held the bottom of the zone that lines up with the 23.6. Price closed above it. Up she went to supply. We fell from there. We made a lower low, but we closed above the bottom of the demand zone. So no reason to remove this zone so far. And now we're right back up to supply. So no removing any demand zones on that daily chart. Same with the 4-hour chart. It's going to look very, very similar to the daily chart because it is the same zone. And now here we are. So I removed no demand zones from the Dow. That's just telling you really relatively how strong it is compared to the NASDAQ. Now on the daily blueprint, I'm going to go ahead and remove these targets to the upside because they have been hit and price is at the sell zone. I do have levels inside of the sell zone based on candlestick structure when this zone was created. You have an inside and up candlestick structure right here at 52,892, but that is right below the upper weekly edge, which I would now treat as support. So I'm going to go ahead and move that up. All right, so you have the candlestick structure here. You have your upper weekly edge. You have your 4-hour or 2-hour EMA cloud on a pullback to 52,939. I would be looking for buyers to step in. That means that bull channel would be higher because we have made higher highs since I created this zone. And you can see that indeed I need to move this gray box up and look to trade off of this as the bull channel now. Okay. And of course, that's going to change where the bullish GP is as well. So I'm going to move that up. Pre-market, the Dow is definitely showing that relative strength that it has been. So when I'm talking about going long SPX, which is what I day trade, and I'm talking about levels on the Dow. If it's coming to support on the Dow, then of course that just gives me all the more confidence to go long on SPX. And that's why I share the Dow chart, because I do call out the Dow levels in relationship to my SPX day trading, especially given the fact the Dow has been the market leader as of late. All right. So there are my buy zones for the Dow, and price is right at resistance. It is right in the supply zone. So exercise caution. If you're already long, great. Use these as levels to the upside. And really quick, my SPX blueprint looks just like this. We closed at 74.89. Price ES is currently up 37 points. So add 37 to where we closed on SPX, and you're going to be sitting right here at about 75.25. All right. If we saw price action on TOS pre-market, this is where the candle would be on SPX. You can see that there is a sell zone directly above. This is resistance. When I manually draw the PMZ on here, these would be targets to the upside if I'm long above the PMZ. Now, just like I showed you with the Dow, if we are right here at resistance, I can still go long in this zone because it has been tested multiple times, but I know and I have to keep in mind that we are in supply. And so I would take my profits and move my stops up, protecting my unrealized profits as we go into this sell zone. All right. If price is below the PMZ and it is a trigger short for me, then I have some levels to put on my chart. That's going to be today's upper daily edge. What was resistance would then be support. Notice how it's right at a psychological number of 7,500. That big round number of 7,500 on a pullback is going to be super important this morning. All right. Also, below there, before my buy zone, is going to be basically where we closed out on Friday and the upper weekly edge for this week. So, depending on where my PMZ prints, I will run some Fibonacci's from where we closed on Friday up to today's high once we open. And then I will also have some other targets inside of here and some potential intraday scalp type zones to go long from as well. But for my set and forget zones, that is 74.78 by 74.58. I do have a bid in here to go long XSP at 74.78 on SPX, and also have a bid to go long at 74.41 on SPX if we pull back to the GP. All right, and this buy zone down here is higher time frame, and if we were to drop 100 and something points today, this is a buy the dip opportunity, but one that I would trade for a swing trade. All right, guys. So that's what my blueprints look like for the futures chart as well as the SPX chart. And any intraday trades will be just verbally called out, but the bigger picture, the set and forget type trades will be alerted. And yes, Jasper, there is a set and forget bid for me on XSP down here in this bull channel. All right. All right, guys, I'm going to turn it over to Trendy John. By the way, John, thanks so much for covering for me while I was on vacation. It's great to know that the room is taken care of even while we're on vacation. So I appreciate each and every one of you, and I appreciate you, Trendy John, as well.
Welcome back, Mel. We're all very happy to see you back. And you're right. When I went to Alaska, it was the same way. It felt so good to know that, when one of us leaves, man, uh, we got your back and we're always here. We're always taking care of business. It was fun. I wouldn't say, there's that joke. It's like it's real. It was real fun, right? But it wasn't. It was real, but it wasn't actually real fun. So we just kind of went sideways. I think you probably have more fun in all the beautiful places you went. I had a lot of FOMO. I lived in England for 9 years, and I've been to I think most of the places you've gone to or went to on this trip, and it just brought back so many memories that I just keep getting the itch. I'm like, I'm just gonna buy a ticket, we're going to go to Europe. I'm not even going to tell Ashley. And while you were gone, I was telling the room, I was actually like, it'd be neat. Maybe Mel and I should just do 1 week on, 1 week off. Now, I don't know if she could get away from the market every other week, but for me, I was like, that would be really neat. And part of the room was like, yeah, that'd be actually pretty cool. So I love it. I love that. I know when I leave, you're here, and vice versa. But we're happy to have you back. I know everyone is happy to have you back, and we're going to start off with sort of the same thing. I just want to go over a couple things. Like, last 2 weeks, I really spent a lot of time just talking about, more about my emotions, I guess you could say, or how I'm feeling this morning, how I'm, going to trade this market. And I want to share with you a few charts here. I'm just going to put us on the futures chart for a few seconds. Trendy John in that room, we're already on there. SPX room, I'm just going to share this with you real fast. We're going to put trendy here just so you can see. And give me 1 second. All right, so right here. All right, so I came in this morning. I actually went long last night. And when I woke up, the first thing I noticed is that we were up about 40 points when I went to bed. And when I woke up, we were up 40 points. And I go, holy moly, have we really just gone sideways this entire night? And I think this picture says it all, right? This is on a much smaller time frame. This is a 5 minute. This is my PMZ from last night, with a basically like what I call a distance gate around it. And this is where we gapped up, and this is price. And so my first thoughts are like, holy moly, this is super choppy, and then I'm like, trying not to intervene with my human emotion, but my first thoughts are, um, let's not get beat up on the PMZ. So I really like the approach from a conservative strategy today, probably waiting at least 5 minutes before the open. We'll just kind of see what that risk looks like, and I might change my mind right away. But overnight, using my strategy, I actually only had two setups that happened. All right, two of them. And the last one was at 21.25. And you can see we had a nice entry here. We did hit target one and target two, but I mean, it really has gone nowhere. So my first thought is it's really choppy out there, right? The macroeconomic calendar, we have quite a bit on the calendar. I talked about it in the BMA. We could get some volatility, because of a tweet or something. I think, the POTUS had said something positive about the war. So we're right back to saying, hey, the war's on, the war's off, or we're not going to do this. It's chaotic, and it creates volatility in the market. And as we said, Mel left 2 weeks ago, and price essentially closed right where she left, right? And even though we have volatility, we've gone nowhere. Now, on the positive end, I can't believe how close we are to the all-time high. Like, when I look at this, my first and your first thought should be, let's throw some primary Fibonacci's on here. My all-time high again is up here at this blue line. And then we're going to come down to last week's pivot low. And you're going to see that we are opening towards the upper liquidity chop is what I'm calling it. All right. It is the imposter level, or the 76.4. All right. So we are opening up very close to a resistance point. Okay. So that's important to know. Remember, like the 85 to, the 85% rule of 61.8 to the 88.7. Well, I really like this idea, but I can't say whether or not that's going to pull back first and give us an opportunity at a gap fill, and then we move up here. But what I can say is that we're very close to that upper level, and that is resistance until proven otherwise. Okay. My overall target for the week, if we can stay above the 618, is going to be this red box up here. And I believe me and Melissa are pretty close to the same area here at 75, 96, 97. And then I'm using the 88.7 as the top of this for now. And it's right there, right? There's an inside and down right there. So this is my target. But again, I need the 618 to hold. And if you watch the BMA, I'd like to see at least 2 days above the 618 in order for us to get there. Okay. So that's what I'm looking at this morning. Far as positions go, um, I've really fallen into the habit of making my money in the first 30 to 90 minutes and then just kind of sitting back and going, whew, well, glad I'm not really doing anything else. I'm just hitting my goals and then we're sitting back. And if I get a swing opportunity, then I'll approach it. One thing I am looking forward to is this week's earnings. Okay. So this week's earnings, we have a really nice lineup, and I personally would love to get in here and trade some earnings. Okay. So if we come over here and I take a look at the Earning Whispers calendar, just as a reminder, I guess a bigger name that maybe some folks might be interested in is Palantir. They do report today at the close, and I may be looking at a chart to look for some call and put debits on this trade. Tuesday, I'm really looking forward to AMD and SpaceX. I'm actually really curious how SpaceX will perform. And this will most likely have an impact if you are holding Tesla. All right. And, that impact, it's like, could it get worse? So just think about these things. Okay. So AMD, Caterpillar, SpaceX, and today after the close, Palantir, these are going to be my focus after I get off the mic. I'll be putting charts together for these trades. And if I have a good setup, then I'm definitely going to put those out far as trades go. Okay. All right, Train John, it's nice to be able to open and close SPX. So, Michael, you had brought up to me, I think it was last week, you were like, hey, man, you can also trade SPX at night on Robinhood. I tried to buy one last night and it said that the order wouldn't be put in until like basically it sounded like the open of this morning. I was a little confused. Yep, they don't do it. Okay, Lorna, thank you. I was thinking they did. So I was saying it and then I tried last night, so I guess they're not quite there. So, oh well. Yeah, all good though. Anyways, those are kind of the things no one will but IBKR. Okay, cool. That's good to know. I wish Thinkorswim would. Yeah. You've already made your Michael's already done, right? And that's cool. And that's the thing you can do with ES future options. So definitely. All right. Another thing that I'd like to go over with you guys real fast is going to be the daily chart. We are on the third day up. Okay. Again, there's no like magic. Just because we're up 2 to 3 days means we have to go inside or go sideways. I'm just letting you guys know we are on the third day up. And this is typically around the time frame that I would say, hey, look for things to slow down. But there definitely was some momentum that came into the market over the last 3 days. Another thing that you want to pay attention to on the daily chart, right, is that we have cleared the previous high here. That is a bullish sign. But right over that, you have a volume candle of down, and we're very close to that. So this, I bet, is pretty confluent to that 76.4 that I was just telling you guys about. This comes in around 75, 73 or so. Okay, so another 10 points up to the upside, right? And when I look at this, our liquidity chop is about 75, 72. So we got a liquidity chop 76.4. And then we have on the daily a volume down candle. So I would say that this is definitely my first area that I'll be looking for Mel's confirmation process to potentially get short. Okay, if the risk to reward is there. All right. So just want to make sure that I bring that up. Over here on the futures chart, as a reminder, the beta indicator is on here. I think we're completely finished with editing. There's been a lot of work on it in the last 2 weeks. Lorna has, I believe, the last couple updates. I want to make sure that Lorna, if you're listening, if not, if I made a couple little detail things that you and I talked about, I'll get that over to you by the end of close today. But it's looking really, really good. And as you,
I get that update.
I sent it to you, Mel. Uh,
Okay, thank you.
yeah, I sent it to you. It's probably lost in all the text I sent you, but it's in there. It's right in the beginning. Take a look there on Slack. It's definitely there though. So so I have this on here, and as you guys know, whether you're using your own levels, my levels, Mel's levels, what we're doing is when price gets there, we're looking for the confirmation, whether you're using it on the 3 minute, 5 minute, 20 minute, it doesn't matter to me, but it is all right here. And I have chosen, I'm showing you two different things here, okay? So on the left-hand side, right here, you'll notice I don't have the banners, but that is an option. That will be an option to you guys in the future. I'm doing that to create space up here, right? But if you need the bigger, I guess, entries, they're right here. So for example, on the NASDAQ, this is a shotgun short, entries right here, risk is right here, stop is right here, and all your targets are in here as well. Okay. All right, and this is your nighttime PMZ. This is going to change here shortly. Once the PMZ pops up on the charts, this is for anyone that is new out there. I know we've had quite a few new people over the last several weeks. The PMZ is automated and it pops up on your chart, the pre-market zone or premarital zone, as we like to call it. Take this thing for a date. You have two different ways of taking this trade. One is called conservative, the other one is called aggressive. If the risk between the top and the bottom line is really small, I tend to be aggressive, especially in the direction of the trend. So we have 3 days up, the banners are green. Then my first thought is if the risk is small, as soon as price jumps over this, and we did this on Friday, right? We just immediately went long and we got a huge explosion to the upside and it paid off very nicely. Sometimes it doesn't, though. Sometimes I'll be aggressive and it'll come straight down and it'll either stop me out or I'll start adding into the trade at lower levels. But let's talk about the aggressive. Again, don't take it aggressive if you're not aggressive, right? If you feel like this risk is too high and it's just not your personality, what I want you to do is wait for 5 minute close. That 5 minutes going to close, and then you're going to wait for price to come back near or at the PMZ. At this point, you have two different ways of inserting your trade here. You can be aggressive. As soon as it gets closer, comes back, you're going to take a long and you're looking for price to push up, especially when the overall trend is green. I'm looking for this bad boy to be a buy zone. Okay. If it's red, I'm a little bit more reluctant and I'm probably thinking about a conservative entry. And we'll talk about conservative here in a second. Okay. On the downside, today's trend is green. So that doesn't mean that it's not going to work. Again, what I've known as human intervention, it's not the best thing in the world. Sometimes it is, most of the time it's not. But if one of these is red or the trend is messed up, then I typically, would say, "Hey, let's go," on an aggressive. But since these are all green up here, I'm actually probably more on the side of wanting to buy the dip and not necessarily wanting to get short through the PMZ. If anything, I want to get short at a zone or a level that Melissa and I have discussed to the upside because the overall trend is green. But if you decide to get aggressive, same thing, just go short immediately as soon as it breaks down below, stops above, and you're looking to take profits at some of the levels that are below the PMZ. Okay. Conservative strategy, you're going to wait for the 5 minute to close. Let's say it closes underneath. You're then going to wait for prices to come back up to this point. And right here, if you're wanting to be aggressive, then you take your short immediately right here and you're looking for prices to break back down and then you take your profits and so forth. Okay. On the aggressive strategy, or sorry, on the conservative strategy, all right, let's talk about these again. You wait for this to close. You wait for price to come back. You wait for the candle to close. Let's say the candle closes right here. From this point, this is where I use a 1 minute candle after this closes. If the 1 minute candles close underneath, boom, I go short and I'm looking for my profits. This is neutral when it closes inside the PMZ. If we get 1 minute candles to kind of do this, and then finally, let's say this one closes over, boom, I'm going long. And again, putting my stops underneath. Okay. Sometimes when we wait for prices to close like this, and then say we come back and we wait and we stay conservative, you're going to be really happy if this happens right here. This is called a pass-through candle. And it's just like, see ya, right? And you think back and you go, man, I'm really glad that I did not take that aggressive. Like I just saved my ass, right? So what happens is this candle now closes underneath here. You go back to square one. Candle closed underneath. We're going to wait for price to push back to the upside, okay? And then we're going to attack it right there, but you're going to wait for this candle to close again, okay? What if it closes up here? Just giving you different scenarios. Closes up here, you're back to this, waiting for it to close and then wait for it to come back, all right? But in both cases, you can really save your ass up here if you stay conservative, okay? Now, currently, I want to go over these charts just so everybody sees. I'm on a 5-minute on the left-hand side at the moment, okay? In the middle here, I'm on a 1 minute to watch that 1-minute strategy I was just talking about, okay? On the NASDAQ, I'm on a 5-minute over here. Now, what I've been doing recently is once the PMZ is established, okay? Once it's established, then on Thinkorswim, I come over here and I grab the dollar sign, which is, the price levels, and I annotate where the PMZ is. So let's just say, for example, it's right here and it's right here. Okay, I'm going to annotate where it is, and then I'm going to go to a smaller time frame. Okay, then I'm going to drop this down into the 3-minute. Now, the reason why I do that in this case is because Mel's taught the confirmation process on the 3. I need the middle one to stay on a 1 because of my entries. Okay, but I'm going to then turn it to a 3, and then I'm going to look on here to see if we get a setup with her confirmation process. Okay. All right, so I'm going to take that off for right now. We're going to put this back on a 5-minute. And then over here on the NASDAQ, quite honestly, I'm very, very particular, and it's very random that I trade the NASDAQ. It's usually like for quick money. Most of the time, I try not to mess with it because it's very hurtful if it goes against me. So I really like to stick to the ES minis and the micros over here. If I trade the NASDAQ, I primarily trade the micros on it. Okay. Anyways, finally, over the last, knock on wood, over the last couple weeks, I got these charts down. Thank you, Michael, for all your help, making sure that, they don't move. Like even I've been shocked if I have to leave during the day. I come back and I'm like, oh my gosh, charts are still there, So I'm trying not to mess with these things. They are on auto. They should stay up here for you. So you guys, aren't like, what the hell happened to the charts and so forth. So they look good on there. Far as like watches, remember I gave you our chart for this. This is also a thing I will be looking at going into this week is if they're not too expensive, I wouldn't mind trading SNDK going into earnings. So that is my chart of the week. It was in the BMA. You can listen to me there as I discuss the ideas around it. Currently, SNDK is up at, well, down, sorry, at 1168. Okay, so it is trading at 1168 bucks. That thing is wild. And quite honestly, after I look at at the options, they're up at 218% implied volatility today. So yeah, these things are expensive, man. All right. So if I take a shot at this, it's definitely a lotto, but it's also based on logic. I'm looking at supply and demand zones, and it has to be cheap for me. I don't know if I'm going to find a cheap option in this thing. I mean, these are crazy. The 1170s for this week were going for $133 by 142. That's $13,000. That is insane. So I don't even know if it's possible, guys. All right, but I will be taking a look at it, and I might trade shares. We traded shares on it a couple weeks ago on the dip, and I think we made like $100 something per share, which was pretty cool, because it moves so much. All right. So my overall thought process today, and my sentiment is: don't fight the trend. Wait for price to get to your level. wait for confirmation if that's what you're doing. If you're doing a set and forget, understand your risk before you take the trade. And let's have an amazing day. Let's continue the winning. It's been really fun. So I really appreciate you and I really appreciate Mel. Glad that she's back and we will be back on. She might jump on before me, but I'll be on probably about, I don't know, 10 minutes, 5 minutes before the bell. But that's all I have for this morning. So you guys have an amazing day and I'll talk to you soon.